Let's talk about what's actually happening with Hbar right now. No sugarcoating. We're sitting at approximately 17.5 cents, 17.35 cents to be exact. This token has been absolutely decimated, down over 43% year to date. That's not a dip. That's a crater. Look at these numbers. The last 90 days, down 32%. Last 60 days, down 24%. Last month alone, nearly 23% gone. Even this week we've shed another 14%, and in the last 24 hours, another 6% vanished. The bleeding has been relentless. Now, I know what you're thinking. TJ, why should I even care about Hbar at this point? And that's exactly the question that separates profitable traders from the crowd. Because here's the thing, Hedera still commands a $7.39 billion market cap, ranking at 19th in the entire crypto ecosystem. This isn't some random meme coin. This is an established layer 1 with enterprise solutions, DAG technology, and real-world payment integrations. The daily volume? Over $500 million. That's serious liquidity. The 7-day turnover sitting at 0.0679 tells us people are still actively trading this, despite the carnage. But here's where it gets interesting. And this is where most people stop paying attention, just when they should be watching closest. The chart is speaking, so pull up that 30-minute chart with me. What you're seeing is a textbook downtrend, no question about it. Hbar has been living below the 200-period exponential moving average like it's paying rent there. The 200 EMA is sitting at about 17.99 cents, and it's been acting like a ceiling that price just can't punch through. But zoom in on what's happening right now. The price is attempting something crucial. It's trying to break above the 20, 50, and 100 EMAs. These shorter-term moving averages have been stacked in a bearish formation, but we're seeing the first real challenge to that structure. Here's what makes this fascinating. The EMAs are still bearish, with shorter time frames below longer ones, but that's starting to compress. This compression, it's like a spring getting loaded. Either it explodes upward, or it snaps back down with violence. Volume tells a story too. We saw massive spikes during the sell-offs, particularly that big spike on November 3rd that corresponded with a nasty price drop, classic capitulation volume. But recently, volume has been moderate, not surging. That matters because sustainable moves need volume confirmation. Now let's talk about the RSI, and this is where things get spicy. The relative strength index is currently hovering around 60.57. That's neutral to slightly overbought territory. But check this out. The RSI just crossed above its signal line and is trending upward. That's a positive divergence forming while price is still struggling. The RSI is basically saying, hey, buyers are starting to show up, even though the price action hasn't fully confirmed it yet. That disconnect? That's your early warning system. Real quick, if you're finding value in this breakdown, smash that like button right now. It tells YouTube to show this analysis to more traders who need to see it. And if you're not subscribed to TJ Crypto World yet, hit that subscribe button and ring the bell. I drop these in-depth technical analyses regularly, and trust me, you don't want to miss what's coming next in this market. Alright, let's keep going. So, we've established where we are, now let's talk about where we're going. And honestly, more importantly, the exact levels that matter. That 200 EMA at 17.99 cents, that's your line in the sand. That's roughly 18 cents, and right now it's the most important price level on this entire chart. Why? Because the 200-period EMA on any time frame represents institutional trader positioning. It's where the big money draws the line between bullish and bearish. A sustained break and hold above 17.99 cents with increasing volume would, well, flip the script entirely. That's not just a technical breakout, that's a psychological shift in the market. That's where FOMO starts kicking in, where shorts get squeezed, and where the momentum players jump in. But here's the catch, and this is crucial. We need sustained breakout. Not just a quick spike that gets rejected. We need to see price break through, retest that level as support, and hold it. That's confirmation. On the flip side, if we fail at that 200 EMA and start sliding back down, we've got support levels to watch. First line of defense is 17 cents flat. That's been tested multiple times recently. Below that we're looking at 16.5 cents, and if that breaks, well, we could be heading back to retest the lower ranges. Remember, Hbar's all-time high was 57 cents. We're currently down almost 71% from that peak, but we're also up over 1,500% from the all-time low at just over a penny. Context matters. The question isn't whether Hbar is cheap or expensive. The question is whether the technical structure supports a trade right now. Let's get tactical. What should you actually do with this information? If you're thinking about going long on Hbar, pump the brakes. This is not the time for aggressive entries. The setup isn't there yet. What you want to see is that confirmed break above 17.99 cents on the 30-minute chart, preferably with a retest that holds, and volume that's expanding on the move up. If you enter long right now, you're essentially gambling that the breakout happens versus getting confirmation that it's actually occurring. That's the difference between trading and hoping. Your stop loss absolutely must be tight. If you're already in a position, consider placing stops below 17 cents. That's your recent support, and if that breaks, the thesis breaks with it. Don't let a small loss turn into a big one because you got married to a trade. For those looking at short positions, and I know some of you are, the setup would be a rejection at that 200 EMA resistance with volume declining and RSI starting to roll over. That would signal the bulls tried to break through and failed, giving you a high probability short entry. But shorting into rising RSI is dangerous. Wait for confirmation of weakness. And if you're holding Hbar from higher prices, this is where you need to make a decision. Are you in this for long-term fundamental belief in Hedera's technology, or are you trading the chart? If it's the latter, consider using any rally toward that 0.1799 resistance as an opportunity to reduce position size or exit entirely. Protect your capital first. Step back with me for a second. Yes, the short-term technicals matter, but let's not lose sight of what Hedera actually is. This isn't just another token pumping on hype. Hedera's built on Hashgraph technology, a directed acyclic graph, or DAG, which is fundamentally different from traditional blockchain. It's designed for enterprise adoption, focusing on speed, security, and efficiency. The tags associated with Hbar, enterprise solutions, payments, layer 1, these point to real utility. The question is whether the market cares right now. And honestly, in the short to medium term, fundamentals take a back seat to technical momentum and broader market sentiment. Bitcoin moves, everything else follows. Fed policy shifts, crypto reacts. That's the reality. But for long-term holders, these fundamental factors really matter. Enterprise adoption doesn't happen overnight, and it definitely doesn't show up on a 30-minute chart. The institutional partnerships, the governance council, the transaction throughput. These are slow-burn catalysts that could pay off over months and years, not just days and weeks. So, you've got to decide what kind of trader or investor you are. Are you playing the short-term bounce, or are you accumulating for the next cycle? Different strategies, different time frames, different risk profiles. Before we wrap up, I need you to do two things right now. First, if this analysis helped clarify where Hbar stands and what levels to watch, hit that like button. It genuinely helps this channel grow and reach more people who need this information. Second, if you're not subscribed to TJ Crypto World, what are you waiting for? Subscribe and turn on notifications because the crypto market moves fast, and I'm here breaking down the plays that matter, exactly when they matter. Don't be the person who sees the move after it happens. Alright everyone, that's the complete picture on Hbar right now. We're at a critical juncture, 0.1735 trying to challenge 0.1799 resistance with RSI showing strength but overall trend still bearish. Watch that 200 EMA like a hawk. Wait for confirmation and manage your risk religiously. Huge thanks for spending this time with me today. Your attention is valuable, and I don't take it for granted. If you want more technical breakdowns like this, I've got a full playlist analyzing other altcoins and market conditions. Check the card popping up on your screen right now or the link in the description. There's some serious value in there that could change how you approach your trades. Until next time, this is TJ from TJ Crypto World. Stay sharp, trade smart, and I'll see you in the next one. Peace.